Hey everybody, welcome. Vince Wollney with PrimeLending here. This week we have a very special guest, Courtney Long with Leavitt Group Texas Select. And we're one of the 14th largest insurance brokerages in the country. Courtney herself has been in the insurance industry for over 20 years, so she has a wealth of knowledge. I always look to Courtney when I need some help with a client or with an insurance question, flood question, whatever may come up. So she's always quick to respond. And just is all around a great person. Hey, Courtney, thanks for being here today.
I'm coming back. That was nice. Thank you. No, really, I appreciate you having me. How are you doing today?
I'm great.
Excellent.
Well, let's talk a little bit about what's going on in the market. Obviously, insurance premiums are going up just like mortgage rates and construction cost and property taxes and everything else. And all this affects the home buyers. And so we want to kind of piece all this together so people understand the process of what's going on in the market.
Absolutely.
So you want to talk a little bit about what's driving insurance cost here recently?
Definitely. So we'll start with COVID. Cost of labor and materials skyrocketed during COVID. And unfortunately, we really haven't seen much drop in the cost of that labor and materials. And we don't foresee seeing any drop in that cost of labor and materials. So that would be the first thing. The second thing would be the frequency of weather-related catastrophes. So over the last...
I think we could get this a little bit larger. Sorry.
That's okay. Over the last 50 years, we have definitely seen an uptick every year in the increase of the number of weather-related disasters that we have. And not only have we seen an uptick in the number of weather-related disasters that we have, but the cost that it costs the client, the consumer, and the insurance company to rebuild and repair all of those things.
All right. That's good. So let's talk about what that cost in dollars and why those costs are trickling on down to the consumer.
You got it. So a good example of what it costs in dollars is reinsurance. So just like you and I buy a policy to purchase to cover our home or our autos or our business, any of that kind of stuff, insurance carriers also buy a policy to protect their book of business. Those insurance policies or reinsurance have gone up 40% over the last year. So that is automatically getting passed directly on to the client. So what it costs in dollars, you guys can see on the screen there, the disasters just from 2022 last year and what it costs. The next thing I would say is that we are also looking at, let's go with the ice storm that we had 2 years ago. It's a great example. So not only are we having a bigger frequency of weather-related disasters, but we had things like the ice storm that happened 2 years ago in February. And I know all of you guys remember that. We were without power, people had freezing pipes, we've seen it all on the news. Typically when we have a disaster, it's a select little area. It's a tornado here or a hurricane here or, a freeze that happened in one little spot. But that particular event cost $9.1 billion in claims for insurance carriers as a whole. And it wasn't a select little area. It was the entire southern half of the United States. And it does take insurance companies, a year sometimes to finish closing out all those claims. It takes a long time to rebuild, reconstruct, and close things up. And then this year, they realized exactly what they were dealing with in losses. We had several carriers that filed for bankruptcy this year. They didn't have enough money in the pot to cover those claims. So they're looking at increases to make sure that they do have enough money, the carriers that are still out there in the market.
I'll ask you a little bit more about that in just a minute, but let's talk about what's happened over the last 70 plus years as far as cost. And just tell me a little bit about that in the marketplace.
So again, we're looking at the frequency and the severity of the claims that are coming in. Tornadoes. We've had a great frequency of tornadoes. We've had lots of hail damage. We even had 2 hailstorms here in our area in the last year. So we had a tornado down in Pasadena back in January, February, if you remember. We've had lots of things that we don't typically see here. So those weather-related disasters continue to rise, and that continues to drive costs. Not only does it continue to drive costs, but the carriers not only are increasing rates, but they're getting stricter on their guidelines. So you can't have this or you can't have that, or we need to have an updated roof that's less than 15 years old, where they used to extend it to 30 years with a lot of carriers. A lot of the restrictions that you're seeing, one of the biggest ones, I think that's a huge change for consumers, is going to be limited roof. So it used to be that pretty much all carriers covered your roof at replacement costs. Now, a vast majority, not all, but a vast majority of the carriers are only going to cover it based on how many years old it is. They're going to go on a payment schedule. If it's brand new to 5 years, they'll cover 100%. After that, 80%, 70%, and it goes on and on.
Okay. So actual cash value cost compared to.
Not even necessarily actual cash value. It's a percentage based on how old it is. So,
Oh, wow. Okay.
and every carrier is slightly different on their payment schedule, but it's based on how many years old it is.
All right. Well, as we know, in the last 70 plus years, the cost of a home has gone up as well. So is it cost to build that home or to replace that home? Let's talk a little bit about that and how those
Definitely.
values are determined.
So one of the biggest questions that I get from clients as well as real estate agents and even you guys as mortgage lenders is going to be, why is the reconstruction cost that amount? So it can be anything from somebody who purchased a brand new home and they bought it for, let's say, $350,000, and we want to insure it for $450,000. And they're like, hey, why? I just bought it. It's brand new. It's only worth $350,000. But you have to remember that insurance companies aren't insuring on what it's appraised for. They're not insuring on what the builder paid. They're not insuring on your tax value or what it would sell for on today's open market. Insurance companies want to insure your home for what it would cost you personally as a consumer. If we had another Ike or a Harvey or something like that that came along today, what it would cost you as a consumer during the time of the catastrophe, so not just regular building, but during the time of the catastrophe, to rebuild the same structure in today's market. And that varies a lot from what you purchased your home for. We used a new home example, but another example might be the Heights is a really expensive area. So maybe you have a client that just purchased a home in the Heights and they paid close to the $1 million mark. And we only want to insure the home. It's 1,200 square feet for $325,000 or so. And now it gets all upgraded. I just paid $1 million. I don't understand. Big question though. I mean, really. But we're also looking at that piece of land in the Heights is worth a lot of money. It's the location that's really costing. It's not the home itself. It's the location. And if that home were to disappear tomorrow and a tornado came and took everything away, the land would still be there. So we're only insuring the dwelling itself or any other, elements that are on the property. And the home itself at 1,200 square feet, even if it's, fully renovated and nice inside, might only be $325,000 versus your loan value.
Gotcha. Well, that makes sense too. So, being here in Southeast Texas, we all know what a flood is. We've experienced, if not once, but maybe twice. Talk a little bit about flood insurance and what's going on with those premiums as well.
So flood insurance had big changes about 2 years ago, and what used to be a standard policy had a standard rate if you were in a low-risk area. By the way, my number one questions is, I'm not in a flood zone. Everybody lives in a flood zone. It's a matter of risk. Are you a low-risk area or are you a high-risk area? So if you were in that low-risk area or X zone, it used to be a standard policy premium, and that no longer exists. They rolled out what they called Flood 2.0 through FEMA and the National Flood System. So I'll give you an example of my own personal house. It used to be that standard policy premium, but if I were to purchase that policy today, based on the new flood rates, it would be about $1,200. My flood zone didn't change, just the way they calculate premium and how they decide how much things are going to cost change. As agents, we don't really have any control over that at all. We put in the numbers, it spits back a premium. But another thing that you can do is if you are an agent or a mortgage person and you have someone who is purchasing a home, whether it's in a high-risk area or not, and you have a client that is purchasing a home from a seller that currently has flood insurance, you can do what's called a rollover. You would get a copy of their current policy and any documents needed to go along with that, maybe an elevation certificate or whatever. Typically, you can get that information from the agent. I know a lot of times when we ask for it, they're like, oh my gosh, the seller said they already packed everything up. But as an agent, I have access to all of that, and I can provide it to you via email or text really quickly. And what you want to do with that is roll it over into your name. So let's say, I'll give you an example of my own parents who purchased a home in Bayou Vista. If I were to write them a brand new policy, it would have been $5,000 right under that, like $4,997. It's pretty shocking, right? Super high risk area, right on the water, very low as far as elevation goes. So at some point, they're definitely going to have a flood. They want to make sure they have that insurance. But the lady down the street was selling a home, and it was a rental property for her, and she had flood insurance. So we rolled that policy over. At that time, her policy was only $1,200, so they didn't have to pay the $5,000 up front. They paid the $1,200. Every year at renewal, it will go up just a little until it gets to that $5,000 mark. But lucky for them, she was willing to provide the document, sign the one little piece of paper, we rolled it over, and they got to go with $1,200 for closing.
That's awesome. Not only does that save the consumer quite a bit of money, but it also may help them qualify to purchase a home, because those factors are all included, your taxes and insurance and stuff, when we're trying to qualify and budget for that mortgage payment. So, I didn't know this until recently, that there's a difference between admitted and not admitted carriers. Can you talk a little bit about that and why it's important to know what kind of carrier you're with?
So they're admitted and non-admitted. So anyone who's admitted to write in the state of Texas, it's bound by the laws, of course, here in the state of Texas. And for example, after Harvey and we had all those little claims, and after the ice storm, we had all those claims. Sometimes carriers don't have enough money to pay out all those claims. But if you are with an admitted carrier, they're backed by the Texas Guarantee Fund. So the Texas Guarantee Fund guarantees, just like it says, that it's going to pay your claim and it's going to return all of your unearned premium. That's for an admitted carrier. So there are non-admitted carriers, and those are great. It doesn't mean that it's a bad policy. They're still great policies. However, they are not backed by the Texas Guarantee Fund, and they are only subject to the rules and laws from which they come. So let's say it's a carrier that's based out of Ohio. They're only subject to the rules in Ohio. They're not subject to the rules here, and they won't be backed by the Texas Guarantee Fund. The nice thing about this is the state of Texas allows for them to write a certain number of policies, and they can tend to be cheaper. And for example, if you needed a windstorm policy, occasionally we can find a non-admitted carrier that's cheaper to have home and wind all in one policy than it is to purchase the policy for home and policy for wind. Still a great option, and sometimes less expensive.
So let me ask you this. So obviously, there's been a lot of carriers pulling out of the state of Texas recently. Florida has had mass exit of carriers. When a non-admitted carrier files bankruptcy and goes out of business, what's the consumer's recourse if they do have a claim?
If they do have a claim, remember that they're only subject to the rules in which the state from where they are, coming from. So you would have to, probably seek some legal advice on what the laws are in that particular area.
Gotcha. So you may not have coverage.
You might not have coverage. I will say for the most part, those non-admitted carriers do tend to be good. You just always have to remember that there may be some extra steps you have to take if something bad really does happen.
Okay. Well, that's definitely good to know. What are some of the common questions that you get from the agents that you work with, or the consumers that you work with, for insurance coverages and deductibles and things like that?
We talked about reconstruction costs just a little bit, but that has changed a lot over the years. So as we know, the cost of labor and materials went up during COVID, really hasn't come down much, may have decreased just a slight bit, but not much, and we don't foresee it going any differently. But reconstruction cost tools that carriers use is one of the things that I get. So I'll have an agent or a client that calls and they're shopping around for insurance for the new home they're purchasing, and they'll say, hey, I went with this carrier, or I got a quote from this carrier and they wanted to insure it at $350,000 and you want to insure it at $450,000. Why? And can I go lower than that? So back in the day when I first started, as I told you, 20 plus years here, all the carriers used one tool. It was called Marshall, Swift & Beck. We called it, as insurance agents, MSB. And they updated each month the cost of labor and materials in your area and your zip code. And that was the same tool that everybody used. So it was pretty much across the board. Nowadays, every carrier has their own reconstruction cost tool. Some of them still use the Marshall, Swift & Beck, but a lot of them use just a basic tool that's built into their quoting system. And remember that they don't just write policies here in Texas, but the premiums here are going to be a little different for reconstruction costs because we have different standards because we're coastal. We need things to be up to a different standard for wind-rated stuff or things of that nature. So those carriers try to build in a tool that's good for the entire U.S. So whether it's, Washington or Texas or, Florida or California, they try to build a tool in. So those reconstruction costs can, vary greatly from one tool to the next tool. So really, you kind of have to go with whatever their tool says. You need to go over all the details with your client, though. Is it a standard home? Is it a semi-custom home? Is it custom? Is it designer? Those can all change. The other thing that we want to talk about when it comes to that is if you feel like the home is not being insured high enough. A lot of carriers have automatically built in, they'll give you an extra, 10, 15, or 20% over and above what your reconstruction costs came back at. Or a lot of carriers will have that as an endorsement that you can purchase to have more insurance in the event that something happens and their reconstruction cost tool is not correct.
That's definitely good to know. Anything else that you want to add this week?
I would say that all policies are not built the same. When we're looking at auto insurance, there are a few bells and whistles here and there, but when we're looking at home insurance, it really varies from A to Z. So you have policies that really don't cover anything and policies that really cover everything. Make sure you go over all the details with your client, whether it be, a quote they got, or you want me to call them and go over something that they've looked at and tell them what the difference between one policy and the other is. Water damage is the number 2 claim in the state of Texas. Obviously, wind and hail is number 1. But water damage is very different on every policy. Some policies cover none, some cover just a little, some cover just accidental leaking from plumbing, and some cover 100% water damage. So those little drips that have been going behind the wall for years before you really realize that they're there.
Wow.
So water damage is a big thing. And just make sure that you have your clients going over their policy a little bit. I know everybody wants the cheapest rate, but the cheapest rate may not get you the coverage you need when you have a claim.
That all makes a whole lot of sense. Thank you very much for coming out today.
Thanks for having me.
Like I said, Courtney is a very trusted partner of mine, an expert in her field. If you have questions and stuff, we'll have her information here and contact information across the bottom of the screen in just a minute. Next week, we have Emily Jones from Old 300 Titles going to come talk to us about title topics and what some of the title documents mean and what's needed and required and what ensures your property as far as a title issued from a title company. If you have any topics that you would like for me to discuss in one of our series, feel free to reach out to me directly. If you have any questions for me, always reach out to me. You can reach me just about 7 days a week. Once again, this is Vince Wollney with Prime Lending. Thanks for tuning in today.